In October 2023, more than 1.42 million Florida homeowners carried insurance through Citizens Property Insurance Corporation, the state's insurer of last resort. By the end of 2025, that number had fallen to approximately 385,000. On the surface, that looks like a recovery. Insurance industry officials and state leaders have called it exactly that. But for the hundreds of thousands of Florida homeowners whose policies were transferred to private carriers without their full understanding of what that change meant, the reality is more complicated. Florida's property insurance market is being fundamentally restructured, and most homeowners are finding out about it after the change has already happened. Citizens Property Insurance Corporation was created by the Florida legislature in 2002 to serve one specific purpose: to be the insurer of last resort for homeowners who could not find coverage in the private market. It was never designed to be Florida's largest insurance company, but between 2020 and 2023, as private insurers exited the state, went insolvent, or restricted their coverage footprints dramatically, hundreds of thousands of homeowners had nowhere else to turn. At its peak in October 2023, Citizens held 1.42 million policies, far beyond its intended role, and according to Governor Ron DeSantis himself, in a condition where a single catastrophic hurricane season could render it unable to pay all claims. That concentration of risk at Citizens was one of the primary drivers of legislative action in 2022 and 2023. Florida lawmakers passed a series of reforms targeted at what insurers described as the core causes of the market failure: excessive litigation, assignment of benefits fraud, and one-way attorney fee arrangements that allowed plaintiffs' lawyers to collect fees from insurers, even on relatively small claims. The reforms eliminated one-way attorney fees, restricted assignment of benefits agreements, and tightened the timeline for policyholders to file claims. According to Gallagher Re, a global reinsurance brokerage, these changes contributed to a meaningful decline in property claims lawsuits and improved loss ratios for insurers writing Florida policies. In 2024, Florida's domestic property insurance companies turned a collective profit for the first time since 2016, even after absorbing insured losses from Hurricanes Helene and Milton, which combined caused an estimated $20 billion in insured damages. 17 new insurance companies entered the Florida market following the reforms. Reinsurance costs, which had surged 50 to 100% in the years following Hurricane Ian's $65 billion in insured losses in 2022, began declining as the litigation environment improved. Citizens' Depopulation Program, which allows state-approved private insurers to assume batches of Citizens policies, transferred more than 546,000 policies to the private market in 2025 alone. The Florida Office of Insurance Regulation received 73 filings for rate decreases and 94 filings for 0% increases between late 2024 and late 2025. Citizens itself recommended average rate cuts for its 2026 policies, the first proposed reductions since 2015. For some policyholders in Miami-Dade County, the recommended reduction averages 14%. In Palm Beach County, the figure is approximately 11.9%. These are real developments. They represent measurable improvement from the crisis conditions of 2022 and 2023. But improvement from a crisis is not the same as resolution of that crisis. And for many Florida homeowners, the current market presents a different set of problems than the ones that made headlines 3 years ago. The statewide average annual homeowners insurance premium in Florida is currently approximately $3,815, according to the Florida Office of Insurance Regulation. That figure is still roughly 34% higher than it was in June 2022, when the first set of legislative reforms was enacted. The national average for comparable coverage is approximately $2,181. Florida homeowners are paying nearly 75% more than the national average, not at the peak of the crisis but right now, after 3 years of reforms and market stabilization. For coastal homeowners, those averages mean very little. In Monroe County, which covers the Florida Keys, the average annual premium runs approximately $7,480. In Broward County, the figure is $6,000. In Palm Beach County, $6,327. Homeowners in Fort Lauderdale face average annual premiums of approximately $8,347. These are not the costs of comprehensive catastrophe coverage. These are the costs of standard homeowners policies before flood insurance, which is separate and increasingly mandatory. The flood insurance situation represents one of the most significant and least understood changes currently affecting Florida homeowners with Citizens policies. Citizens implemented a mandatory flood insurance requirement on a phased schedule. As of January 2027, all personal lines residential properties insured by Citizens must carry flood insurance. Properties already located in FEMA special flood hazard areas were required to have flood coverage at policy issuance. This requirement is not optional. Homeowners who do not obtain flood insurance before the applicable deadline will lose their Citizens coverage. Federal flood insurance through NFIP or private flood coverage is available, but the cost adds substantially to what are already some of the highest housing insurance costs in the country. In high-risk coastal zones, flood insurance premiums can add $2,000 annually on top of a wind and homeowner policy, pushing total insurance obligations above $10,000 per year for a single property. The Citizens depopulation transfer process is creating its own category of confusion and financial surprise. Under Florida law, a homeowner cannot remain with Citizens if a private market insurer offers a policy at a premium within 20% of the existing Citizens premium. This is known as the takeout rule. If a private carrier submits a compliant takeout offer through the state-approved program, and the homeowner's Citizens premium meets the threshold, the transfer is effectively automatic. The homeowner receives notice that their coverage is being moved to a new private insurer. They can request to remain with Citizens only if no compliant offer has been made. According to legal filings and consumer complaints documented through the Florida Department of Financial Services, many homeowners did not fully understand the transfer process when it occurred, including what coverage differences existed between their Citizens policy and the replacement policy offered by the private carrier. The carriers entering Florida through the depopulation program are in many cases relatively new companies with limited operating histories in the state. When 10 Florida-based insurance companies became insolvent between 2020 and 2023, their policyholders faced abrupt disruptions and in some cases delayed claims processing. The carriers entering the market now in response to the reformed legal environment are different companies, but the question of financial stability is not settled by the number of entrants alone. Citizens spokesperson Tim Cirio, speaking in December 2025, said that Citizens has returned to its proper role as Florida's insurer of last resort. But that statement implicitly acknowledges what it means. Homeowners previously covered by the state-backed insurer are now relying on private carriers whose long-term commitment to the Florida market has not been tested by a major storm since the reforms took effect. That test may come. NERC's 2025-2026 Winter Reliability Assessment flagged elevated risk profiles in several regions. More relevant to Florida is the hurricane forecast environment. Hurricanes Helene and Milton struck Florida in the 2024 season, resulted in approximately $20 billion in combined insured losses despite both storms weakening before landfall in some key areas. The Florida Office of Insurance Regulation has noted that no widespread significant rate increases were filed by private carriers in the aftermath of those storms, a fact cited as evidence of market stability. But the loss-absorbing capacity of new entrants remains an open question. Reinsurance costs, which consume an estimated 30 to 50% of consumer premium dollars according to various industry estimates, declined in 2025 partly due to a relatively quiet Atlantic season. A return to above-average hurricane activity could reverse that trend within a single underwriting year. Construction costs remain elevated and are not declining meaningfully. Reconstruction expenses in Florida rose approximately 12.4% due to inflation and supply chain disruptions, and proposed federal tariffs on steel, aluminum, and lumber have prompted insurance industry analysts to warn that sustained implementation could add billions of dollars to construction input costs. When replacement costs rise, insurers adjust their coverage and premium calculations accordingly. Florida homeowners who purchased policies based on one replacement cost estimate may find that same coverage inadequate within a few years if construction prices continue upward. The non-renewal rate in Florida remains above historical norms. Current data shows approximately 3.35% of Florida homeowners' insurance policies are not renewed annually, higher than past years, and higher than comparable markets. Homeowners who receive non-renewal notices are not automatically eligible for Citizens if a private carrier has offered them coverage. The interaction between the takeout rule, non-renewal patterns, and the mandatory flood requirement is creating a compliance and coverage puzzle that many individual homeowners are navigating without professional assistance. For homeowners currently insured by a private carrier that assumed their policy through Citizens depopulation, several facts warrant verification. First, the terms of the assumed policy should be substantially the same as the Citizens policy at transfer, but coverage limits, exclusions, and deductible structures should be confirmed directly. Second, hurricane deductibles in Florida are typically expressed as a percentage of insured value rather than a fixed dollar amount. A 2% hurricane deductible on a $400,000 home means the homeowner absorbs the first $8,000 in hurricane-related damage out of pocket before coverage applies. Third, flood coverage is not included in a standard homeowners or wind policy. A homeowner who experiences flooding from storm surge during a hurricane will find their standard policy does not respond to that loss. The Florida Office of Insurance Regulation maintains monthly residential market share reports that track premium data from more than 90 state-regulated property and casualty insurers. The most recent data available shows average premium stabilizing but not falling below the elevated levels established during the 2022 Thor surge. For the roughly 5 million Florida households carrying homeowners insurance, understanding the current structure of their coverage, who the carrier is, what the policy covers and excludes, whether flood insurance is required or advisable, and what the hurricane deductible calculation produces in dollar terms, is the practical starting point for evaluating risk. Officials at the Florida Office of Insurance Regulation have expressed confidence that market momentum is in consumers' favor, citing the quiet 2025 hurricane season, continued reinsurance cost declines, and increased underwriting appetite among carriers. Citizens' 2026 rate recommendations are pending final approval by the Office of Insurance Regulation following a public hearing, with the rate changes expected to take effect on June 1, 2026. Further developments on rate approvals, new carrier entries, the mandatory flood insurance compliance deadline of January 2027, and hurricane season outcomes are expected as more information becomes available.